There we go. All right. Hey there, everybody. Christopher Franks with Texas West Capital checking in here at about just a few minutes after 11 a.m. Central Standard Time here on Friday, the 3rd of February, 2023. Great to have you all checking in with me. Coming at you live here from just north of Houston, Texas. So, fortunately, we just got a little cool weather and some rain. Our friends everywhere from Austin to San Antonio to Dallas to Lubbock. Man, oh man, you guys, I feel for you. There's some pretty nasty little weather for you guys. And I know everybody up north is probably laughing at us saying something like that, right? Or if you're in areas where snow is a normal every year thing, ridiculous amounts of snow. But, a little bit different down here in Texas. So, craziness. Anyway, hopefully y'all are doing all right. Good to see y'all. Getting some changes, overall with what we're doing. I told you, TWC is expanding this year, and we're doing some other things as well. So you guys are going to see some updates to channel names and channel banners and all that fun stuff. But I promise you, it's all for the best. It's all good stuff. Good to see you, Kimasabi, Nevlusian, Fibbo, Data, Onyx. Good to see you guys. Real quick here, guys, if you're just joining in, you haven't joined us yet, you can join us here at howtotradetowin.com/LMT. That is our mentor program. Getting amazing results already, which is fantastic. By the way, if you guys are in that program, don't forget, we do have our weekly mentoring call here at 1:30 p.m. Central Standard Time. So that's in about, what is that, 2.5 hours, 2 hours and 20 minutes, about that. So looking forward to that. Anyway, we'd love to have you there. I still do have one actual discounted position still available if anybody's interested in that. $2,999, which is a significant discount, of course, of what it is there. But you need to send me a message, Christopher.inks@TexasWestCapital.com, or if you're on our server, you can DM me over there. First come, first serve is always with that, and you can get in there with us. Don't worry, you haven't missed anything. The mentor program is an evergreen program. It continues on month after month. And so you can come in and you'll have things that you can go through. And then, of course, just joining us on the weekly mentor calls. Anyway, so great stuff going on there. Hopefully you guys, again, I keep saying it, hopefully you guys are doing all right. I see a lot of nonsense out there in, in crypto Twitter and whatnot there, gosh, man. I understand it. It always blows my mind. Doing this for as long as I've been doing it, and just seeing the same things year after year, right? Every market, people are always the same. People will never change. That's the whole thing. In general, this is why if you choose to make a change in your life, whether it's with trading or anything else, if you actually make a conscious decision to change and then make a conscious effort to do it, you're going to be so far ahead of most everybody else just in the world. It is the way it is, guys, because most people, whether they like where they're at or not, they choose to remain there. They're comfortable. It's not, it's not that they maybe like it there. Maybe they don't like their situation, but it's comfortable. It's what they're used to. To do something different means they have to put in work. They can't just sit there and complain and blame it on somebody else. And so I'm telling you guys right now, you're not going to get anywhere in the world if that's your attitude. But if you can change that attitude and just kind of really decide you want to do something different and then take the appropriate steps to do it, the world is your oyster. I'm telling you guys, you can do it, all right? So anyway, you can get that right here. And like I said, there is the link there. Also, you can go to this other link here, howtotradetowin.com/T3, and that will get you, we're just about ready to close this up right here. This is our, our flagship product, our, tier 3. That's where you get education. You get 3 live streams a week, educational live streams a week. We got well over 300 hours of educational video content. You get, daily and intraday updates, 25 different products there. Chart requests, chart critique, stuff like that. And you just come on in here and just kind of enter your email there. Boom. Click the button and get in on it for $19.99, guys. No auto renew, nothing like you have to worry about. Oh my God, I want to take advantage of this, but only for 1 month. But I don't want to forget to turn it off or whatever and have them charge me $200. No, this is just 1 month, guys. No auto renew, no nothing. What? Seriously, $20. $20, go out to eat, right? Fancy little, not even a fancy restaurant anymore, right? You go out to eat, or you can do something that's going to like affect you positively in your life. Your choice. I know most of y'all choose the fancy little dinner, but the smart ones out there, you know what's up, right? So, let me see here. Ooh, work. Yeah, that's pretty much what everybody thinks, right? And that's why nobody gets anywhere. And the government tells you it's okay. You can blame it on somebody else. Government jumps and says, hey, we're the government. We blame it on everybody else. We're going to blame everything that's happening on you. It's your fault. If you're a business, it's your fault that inflation's up. If you're a consumer, it's your fault that inflation's up, right? But it's okay. You can go ahead and blame people. We blame people. It's all good. It's not all good, guys. It's not all good. Brian Riley, Fadi, what's going on, guys? Good to see y'all. Hey, Carpio. Good to see you as well. Andrew Bennett is here. Hey, guys. So listen, so this morning, man, what a surprise, right? I mean, that's just nobody expects, you have this $185,000 job, that what you're expecting for jobs, right? No reason to really expect any kind of blowout. And all of a sudden it comes in at, what was it, 500 and, oh my gosh, what was it? I have to pull up my numbers here. It was 517,000. So crazy. So you had 185,000 expected, ended up with 517,000 jobs added, which was huge, right? Now, at the end of the day, it's still less, right? So we peaked at like just about a year ago from now, somewhere like that, I believe, at about 700 and, I don't remember what it was, 720, 760,000 jobs. And so this is a big increase, obviously, from it. But, we've been on this kind of doing this coming down. So what we need to see now is next month, before the next Fed meeting, we want to see jobs pull back. We want to see that. So right now, the Fed came in, Jerome Powell came in earlier this week. The Fed raised interest rates, 25 basis points, what we were expecting, right? No surprise there. But I think probably the big change in everything was the word disinflation that Powell used, right? So Powell used it, I think, 14 or 15 times. He hasn't used it since before they really started hiking aggressively, right? And so now we're talking about disinflation, or he's talking about disinflation, right? Disinflation just means the slowing down of inflation, right? So everybody usually goes inflation to deflation, but between that is disinflation, when your inflation is coming down, right? So he was positive about that. Said they're going to have to watch, the numbers coming in now for, inflation, stuff like that. But here's the thing. So we get the 517,000 jobs. Labor force participation rate was 62.3%. Last time they expected it to drop to 62.2%. Instead, it rose to 62.4%, which is still below that 63.5 or whatever it was prior to the pandemic, prior to March of 2020. So we're the participation rate, those are people out that the government actually counts as out there looking for jobs, is still lower than that, but we did get that surprise hike there, right? Average weekly hours, 34.4 hours on average last time, expected 34.3 this time, so just a slight decrease. Instead, we got a slight increase to 34.7. But my title for this episode, this show here, was that the 517,000 jobs is not all that is not all there is, right? There's more to it than that, right? And so what the Fed is looking for, okay? So the Fed has a dual mandate: employment and inflation, okay? Now, inflation is coming down. It's been coming down significantly for half a year now, right? Jobs have been coming down significantly as well, right? Now, we do have this boost here, but here's the thing. It's not just about the jobs, but I've been mentioning for a few months now, it's about the pay, right? Because what we're looking at, why is the job so important? Because if people have jobs, they have money, right? If the money they're getting from those jobs is increasing, then they have more money, right? And more money means the possibility to buy more things, which keeps prices rising, right? In an inflationary area, right? So what the Fed looks at, not just is the jobs, but is what is the average hourly earnings, right? So average hourly earnings month over month came in at expectations there at 0.3%, and that's down from 0.4% last month. Year over year, this is where the big one comes, guys. So year over year, we were at 4.9% last month, and we were expecting 4.9% this month. We actually came in at 4.4%. So what it's saying here basically is that the average hourly earnings are dropping, right? So even though the jobs are there, what they're getting paid is coming down. So what does that mean? That means potentially things like bonuses and strong increases in hiring pay and whatever have actually potentially come down. And that's good. That's what the Fed wants to see, right? So the Fed talks about a soft landing. Everybody's talking recession. Fed's saying soft landing, right? So what does the Fed need for a soft landing? They need inflation to come down, right? And then they need jobs to still stay afloat to support, right? So you don't want jobs to go, if jobs are, or if inflation's coming down and jobs are going away, well, then you're looking, running into a recession, right? But if you've got inflation coming down and you've got jobs kind of holding steady or not really losing too much, that's softening the effect, right, of what the Fed's talking about, the Fed's interest rate rises, right? Interest rate hikes, right? And so that's what they're talking about when they're talking about soft landing. And so what are we getting now? Well, we're kind of getting that. Now, soft landing doesn't happen tomorrow or next month or something like that. Could potentially run into 2024, right? But what they're seeing so far is still evidence that it's still quite possible that we have this soft landing. Now, the other number that came in today with all of this, let me see if I can find it here, was the unemployment rate. So unemployment rate was 3.5% last month. It was expected to rise just a slight bit to 3.6 this month. Instead, it dropped to 3.4%. Now, this is the lowest our unemployment rate has been since 1969, I believe. So there's a lot going on there, right? But if you wonder why everything's not crashing to hell in a handbasket just yet, it's because jobs remain strong. And so even though jobs are remaining strong, we are seeing a decrease in the average hourly pay, which is that's a good thing. That's what the Fed wants to see, right? It kind of mitigates the effect that jobs are doing, so that jobs are continuing to be added, right? Because again, the whole idea about jobs, the reason why we're watching those numbers is because more people have money, right? If more people have jobs, more people have money, more money there, more money to be spent. More money to be spent means inflation could catch again, right? So, these are the kind of things we're looking at, but you can't just take it just as, one number thing and that's all it is. This is what I keep trying to get you guys to understand. There's more to it than that, right? And if you pay attention to crypto Twitter, whatever, most people are stuck on one thing, right? The last few months, it's been pivot, right? Fed pivot. And I've been telling you guys, don't worry about the pivot. Stop worrying about the pivot. Pivot may or may not come. Worry about the fact that we've got the cooling off. We've got the deceleration month after month after month. And if you did that, you likely would have bought in closer to the bottoms of what we had with the stock market and crypto, right? If you're worried about pivot, you're probably scared, still thinking there's a lot lower to go, and you've missed this whole 50% run up in Bitcoin, for example, or 200% in whatever else is ran up, right? So, don't just get hooked on the one word. Look at, you have to get an understanding of what everything's going to go, what all is entailed in it. How does it all get together? That's what I try and help you guys understand here in the short time that we have each time, right? Hey there, Mark. Good to see you. Andrew, what's going on, man? You like the banner? Good, man. Good. Little do they know, more money means more crypto buying. Hey, Jonas, good to see you, man. So anyway, so this is kind of where we're getting at with all this, right? Let me see here. Yeah, so everything kind of coming down other than jobs. Jobs, it's been kind of coming in. I mean, jobs have been continuing to increase, but their increasing has been coming down, right? The amount they've been increasing has been dropping off. So it's been slowing down. And then we have, of course, this past month. But, so there we are. That's kind of where we're at here. So what we want to see, how does the information come in over the next month, the next 2 months, right? So the next two Fed meetings are March and May, okay? Now, we've talked about the likelihood that we're going to get, another 25-point 25 basis point rate hike coming up in March, and then potentially flat in May. So now with what happened with jobs here, again, cushioning the Fed reaction to that is going to be the fact that hourly pay is dropping, right? So what does this mean? Well, if you look, a lot of tech jobs going down, a lot of that's going down, right? But hiring is going up everywhere. So if we look this time, hiring was coming up across everything, right? It wasn't just one thing or another. It was a lot of different areas, other than tech or information. That's where we kind of saw the jobs lost. But like restaurants and whatever, their hiring was up. I guess what do you call it? Like leisure, can't even say it. Leisure and hospitality, right? So they were up like 128,000 jobs. Education and health was up 105,000 jobs. Business services 82,000. Government 74,000. Retail 30,100. Construction still adding another 25,000. They're still hoarding, right? And then manufacturing up about 19,000 jobs. So that's kind of where we're looking at, right? Restaurants themselves hired 99,000 new workers. So of that leisure and hospitality, that's 128,000 jobs. 99,000 of that was with restaurants, right? So, again, professional business services, that's the one that came in at 82,000. That's one of those ones, again, that's been cooling off for months now. And it's, now it's got this gain of 82,000, right? So, again, we'll see what happens. Is this just a one bump and then kind of coming down, right? Because governments, even though government hired 74,000, their payrolls, right? Their payrolls right now are still about 500,000 below the pre-pandemic level. Okay? So, yeah, I mean, it's kind of, again, it's more than just one thing, right? It's more than just one thing. The surprise with the jobs number is a big surprise, but it's only one part of that story. And the other really significant part of that story is that overall wages are coming down. And that's really important, right? Because, again, that has to do with the money. Again, the whole jobs thing really just has to do with money. How much money is out there to be spent? Oh, let me see. Who else just joined here? Deadly, what's up? C-Mac, good to see you checking in. So anyway, so where are we at now? Is that Limitless? Good to see you checking in. So now we've got this pullback with Bitcoin, right? So the way I'm looking at this moment, man, it's this is just a lot of overlap here, guys. It means there's a lot of potentials and possibilities, right? And so what do we have? We have this pullback down to the 1 hour pivot here, right? This is where we're finding support. And we have kind of like this bullish engulfing candle, and we rallied up here to the 15-minute pivot, pushed back down. But are we going to be able to see that breakout higher? Right now, I'm looking at this as an ending diagonal here. So ABC is 1, 2, ABC is 3, 4. And then ABC is 5 up here toward this EQ area of the purple range, 24,760 or so. Potentially up toward 24,895. That's kind of what I'm looking for. And then we'll look for wave 4 to kind of pull back, over to that 22.7 or something. But right now, we need to see, can we break out? So we need an impulsive breakout above the 15-minute, which just means large candle spread, large spike of volume, right? And that'll signal, okay, wave 4 is probably complete. If we can break out above wave B here, and that on Coinbase is 24,148 and 37 cents. If we can get above that, that'll add confidence to the count and say, okay, wave 5 is in progress up toward this target area. So nothing's really changed, just the way we're getting there. Now, one thing I was looking at was maybe, so we've got this triangle for wave 4 and then wave 5 of 3. And I was like, well, man, what if we've got another potential triangle going on here? What if this is A, B, C, we get D and E, right? So I'm going to leave that in your head just in case we get a 3-wave rally up here that stays below the wave 3 up here. So 3 waves up and then 3 waves back down. And that might suggest that we've got this larger degree triangle after a smaller degree triangle. And that could see quite the boost. That could potentially see us really rallying up toward this daily R1 pivot rather than just right around this 24,700, 24,900 area. Could see us really potentially heading up here $1,000 higher Because again, it's coiling, and it just releases a little bit, coils some more. So it's coiling within coiling, and then you get the big boom, the big pop out, right? So just be wary for that. If we continue to go here and break out above wave 3, okay, we're looking at that target. But again, if we're doing 3 waves up and it stops prior to wave 3 and then 3 waves back, excuse me, which reverses prior to this swing low here. So ABC, ABC, that's going to suggest maybe we got a triangle and then a larger triangle. And again, we could potentially see us rallying all the way up here to 25,900, or heck, maybe even the EQ up here around 26.5. And if we hit this area, guys, on just this wave circle 3, kind of hit this 26.5 area, there's a good chance we're going to see wave 5 rally up toward that 29,000-30,000 area that I've talked about. There's a lot of guys, don't think that we can't possibly just grab and run here, okay? There's so much going on right now in terms of bullishness. Look at the daily. We've crossed bullishly down and oversold. We just got to break out, right? So there's a lot of room here for price to run, right? We have hidden bullish divergence right here, right? We've come in sideways between the R1 and the pivot, which means either we go to the R1, we pull back the pivot, and we break out higher, or it means we're exceptionally bullish and we break up the R1 to the R2, pull back the R1 and continue up like this. And that's really bullish, right? But a lot of this right here, guys, let me show you something. See this right here? This is very similar to what we had here. So again, right now where we're at, we're doing this same thing. Higher highs, higher lows as we consolidate, looking for a potential big breakout. So don't tell me it can't possibly go up to 40,000. I've been talking about since the bond. There is that possibility we get a really bullish run up to 40 or 50 before we get a decent pullback. And there's no way to know right now if we're going to get that or not, but you have to be aware of it. And before you say, oh, that ain't going to happen, it happened right here last time. Oh, this one, shoot, this is Bitcoin. This isn't BLX. I was going to pull it back to 2013 area. But look back there as well, okay? So don't think for a minute that it can't happen, right? Again, look at the excessive rallying here. Very little pullback, right? On this way here. So don't buy the nonsense out there with the guys who can't get over the fact that they're still bearish and they've been telling you to short every time. They told you to short here, 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 here. Well, there's here, 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 here. And they keep telling you that, okay? Stop listening to nonsense. It's silliness. If as a trader, if you can't acknowledge when your bias is likely being, is likely wrong, then what the hell are you doing, right? What are you doing in there? Right now, it's so emotional for these traders out there that they can't let go. They just emotionally, they can't let go. They can't say, okay, maybe I'm wrong and look at something else. So they're going to keep telling you short, going to keep telling you short, going to keep telling you short, right? Don't listen. When price gets like this, especially with Bitcoin, you just need to continue riding it up until it shows you that it's actually going down. Because you can get, again, like 2019, that's the soonest one we had here, right? You can see that it just continues to go, 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 right? So, again, here's where we are, right? Higher highs, higher lows. Same idea here as over there. Hey there, Silvio. Good to see you, man. Scott Webb, what's up, buddy? I hope your restaurant's doing well, man. Did you add to that 99,000 of hiring for the the previous month? Anyway, so yeah, but again, if we're looking just at structure, forget Elliott wave counts or whatever, right? If we're breaking out impulsively above this swing high here, this is all inefficiency here, just like this was all inefficiency here. And I told you guys way back down here, I say if we break this level here, we're liable to fly up through that. That's exactly what happened, right? Same thing here. If we're breaking through this level just a bit higher here, there's little reason to think we can't rally up here to 29,000, 30,000. And then the question becomes, do we get a decent rejection there, or is it just a limited pullback there and we rally on up here to this larger area around 40,000? 40, 43, somewhere right around there. 45 even. They're both, yes, it's possible we could get rejected here. I don't think it happens. On the daily, if we do, again, as I've been talking about, if we lose this swing low over here, this 22,298 area, then we should, again, inefficiency here, we should drop right on down this next area, which is at the daily pivot. And then I would look for a reversal, and I want to see a breakout above there. If we can get that, boom, we should rally back up. No problem, right? Recency bias makes many want to short a rally. Yeah, exactly. It is what it is, right? People don't understand it, though. They're not paying attention. But you guys are paying attention, right? You're not jumping out ahead. You're kind of waiting for things to tell you what's up, right? That's the way it should be. Nobody knows what's going to happen for sure, guys. Nobody can guarantee you that something's going to happen. I mean, they can try. They can say, I guarantee this is going to happen, and they got a 50-50 chance it does, right? But if you sit here and you just think about what I said, why in the heck would you listen to somebody that guarantees you something's going to happen? Does that make sense, guys? Listen to what I just said. Any fool can get out there and guarantee you that price is going to do something. And they have a 50-50 chance it's going to. They got a 1 out of 2 chance that it's going to do it. And if it does it, they can run around beating their chest, going, look, I told you, I guaranteed it. And then, unfortunately, new, less aware traders are going to come in and be like, oh my God, I need to follow, I need to do whatever they're saying, right? But you're not thinking and realizing that they just had a 1 in 2 chance. Either it happened or it didn't. It just happened to happen. Okay, look, they got lucky, right? What I talk to you about is I talk to you about structures. I talk to you about counts. I talk to you about pivots. I talk to you about all these different things. What normally happens with price action when it gets through areas, again, inefficiency, stuff like this. And I give you a reason and a path and, a narrative is why it would happen, right? I'm not just going to tell you, yeah, it's definitely going to go up because the bottom's in. I mean, I think the bottom's in, but, I can't guarantee it is. I don't know for sure, right? But I trade this like it is. Why? Because it's giving me more and more reason to believe it is. Does that make sense? So, again, and again, I give you that other side of it, right? I'm not going to tell you, oh yeah, it's definitely going to go up here. That's all there is to it. I told you right now, if we're dropping below this swing low over here, this 22,298 area, odds are we're going to break on down here to 21,170, down here toward the pivot, the daily pivot. My expectation, though, is that we would find support there. And if we do and we break back out above the swing high, well, then that's just, hey, we're heading up here at least 30,000 most likely. So, I mean, even if it doesn't go up from here, you guys have a path. You have a narrative. You have an understanding, of why and where things should potentially go. That's what trading's about, guys. Fiboswani likes big bottoms and he cannot lie, he says. Andrew says the daily R1 to pivot is quite a pullback, but still bullish. Well, yeah, I mean, the idea would just be that you're getting 5 waves up there, right? And if you're getting 5 waves up there, let's say just to that R1 pivot, right? And you pull back. I mean, here's the pivot. 50% is right there, 20,700. So you get a 1 and a 2. I mean, yeah, it's not really a big deal overall, right? So, I mean, this is what we're looking for. So, again, right here, we want to see a impulsive breakout above the 15-minute pivot, and that'll signal that the wave 4 is probably done. Breakout above wave B, we'll add confidence to the count. You should be looking up here at least for that. If we do break on, if we do happen to just do 3 waves up and then 3 waves back, again, potentially finishes a triangle into a larger triangle, right? A, B, C, D, E, and that's kind of like the 1-2 that we talk about that gives you the really extended wave 3. It would be the same idea. You've got a triangle contraction. Let's just a little bit out, contracts even bigger here, and just waiting for that boom, that pop and breakout. In that case, again, you're likely seeing at least the daily R1 pivot, if not, the EQ up here, 26.5. At least, right? Because you're getting that double kind of coiling up, right, before things let go. Scott says they did hire 2 people, but also lost a couple of people. Okay, so you weren't really, you were contributing to it, but you were contributing to the other side as well. But yeah, so JCC, what's up, man? This is learning to pay attention. I love it. Guys, let me tell you something, guys. If you think you're going to come in here and learn how to trade amazingly in 1 day or 1 month or even 1 year, you're wrong, okay? It takes time. It takes effort. And it takes consistent effort on your part. It does. You can't just go like give effort for 2 weeks and that be it. You know, you can learn to do it, but then doing it, learning to do it and actually doing it successfully are two different things, right? That's why with like tier 3, why we have our weekly educational streams, right? We do Wyckoff on Mondays, we do price action on Wednesdays, and we do Elliott Wave on Thursday. And not only do we focus on those, but we also bring in the other things to kind of show how they integrate together to give you a basic market understanding and seeing how there's really not a whole lot different between them. They're just different ways of looking at it, but they tend to take you to the same place. Because trading is simple, right? You're just moving through areas of liquidity. But it's not easy. You have to deal with your emotional and psychological side, right? And that's the real hard part. That's the part that keeps you from sticking to your trading plan or from making a trading plan to begin with. That's the part that keeps you from having proper risk management. These are requirements, guys. They're not suggestions. You have to have proper risk management. You have to have a trading plan. It's not a suggestion. If you're not doing those things consistently, you're losing money. I hate using the word guarantee, but man, I can all but guarantee you're losing money consistently if you don't. If you trade every trade as its own trade instead of applying a system to it, I can all but guarantee that you're losing money. These are the requirements, guys. This is how you get rich trading. It's how you make money. But it's not going to happen overnight. And guess what, guys? Those that happen to get lucky and they get onto something and they, maybe make a good amount of money on it, they do that once or maybe twice, most of those people will have lost their money. They will lose it all back to the market because they don't have a system. They got lucky. They got in at like the perfect time. It happens. It probably happened to you sometime at one point, right? But getting in at a lucky time does not mean that you're a good trader. And that's where people get confused. Everybody's an expert in a bull market, right? The goal is to have a system that you can apply mechanically over and over again that over time increases your wealth, your capital account. If you're doing anything else, I can all but guarantee you're going to lose your money rather than make it. I hope that makes sense, guys. Let me see here. Going through the educational video, C-Mac? Awesome. Yeah, I'm going to have a whole, but those are all going to get redone. But we're going to everybody keeps asking for me to make sure I archive them, but make them accessible. Because that was me, 5 years ago or whatever, almost 6 years ago. So I'm going to keep those old ones still, but we're going to update the way the new ones are. Hopefully make it even easier to follow through and understand and everything. Always trying to make it better and easier every time we do something, guys. Bad trading is playing casino. That's right. Frank, what's up, man? Good to see you. Kimasabi said, seen so many on the run to 64K and say this is so easy. Didn't learn until this year. Yeah, it happens, man. It happens. Managing the emotional side is very hard. It can be very expensive. Most definitely. That's why I talk about it all the time. And the thing is, for most people, the first, the second, the 15th time I say it, you're not going to listen. I understand that. I don't take it personally. But I expect that that's what's going to happen. That's why I continue to talk about it. You have to be at that point where you're actually open, ready, willing, and able to listen. Because remember, I talked about it before. The first step is acknowledging that you're doing something incorrectly. The second step is saying, okay, well, I want to do something about that. The third step is actually making a plan to do something about that. Fourth step is actually following through and doing the things that you have to do to change that. You can do all those first steps, but if you're not doing the last one, actually doing it, it's just not going to do you guys any good, right? Dale, what's up? Says, do you think the DXY will keep dropping or reversal now? No, I don't think there's a reversal. I think if anything, the dollar gets a bounce. I think the top's in for the dollar. Until proven otherwise, I think we've done enough that the top's in for the dollar. So yeah, a bounce maybe. What's up, Hank? I see you there. Let me see here. Where is my DXY chart? Right here. So here's what we're kind of looking at. Is this idea that maybe we've got this this 1, 2 here maybe. So what are we looking at? Generally we're looking at the daily pivot and the weekly pivot. Okay, kind of move this out here. So generally, we're looking here at the daily pivot, and then we're looking at the weekly pivot. Weekly pivot's right around 104.25 or so. Daily pivot's right here at 103.8, right? Let me see here. Yeah, that should be right about 4126, yeah. So yeah, the weekly pivot is right below the daily R1 pivot there. So, I mean, generally, if you're watching the DXY, here's all you really have to do. Here's all you do. Are you going to get impulsive breakout above the pivot? If you do, next target should be that weekly pivot right here around the R1. Do you get a sustained impulsive breakout above it? Does it break out impulsively, looking candles like this, you threw it, and then stay above it? If it does, okay, then we start looking like, okay, maybe this may be wave 1 down, and we've got wave 2 coming in, and we'll go do wave 3, right? But if it gets rejected here at the daily, or it gets rejected at pivot at that weekly, and then drops back below the daily, I mean, you should be looking further down. Again, for me right now, this was a big rejection right here at the weekly. This weekly candle right here, first week of January, that's a big rejection. Big, large supply in there. Boom, coming down, right? All we're doing at the moment here as far as the weekly goes is we're just like dipping below this support here from the week of May 30th of last year. Kind of bounce it back up. But again, we would actually have to break out above that. My expectation would be if we continue rallying to it, we would just get rejected at it and come on down. I'm still looking here at the S1 pivot right now with that. So, I mean, that's kind of where I am with that right now. We've really got to clear this swing high here at 105.631. But, even if we do that, then we're looking up here around 107.4 or so, 107.5. Right into this supply right here. This previous resistance, right? If we're to break that, then we're probably looking closer up here at 110.5, and then it starts looking a lot more likely that we continue up higher. But there's a lot of steps you got to get through to do that, right? And so far, weekly hasn't dipped down into oversold yet. It hasn't reset. Daily still never reset down into oversold either on the RSI. And those are usually things we're looking for before major reversals, right? Whether they be very large wave ones or actual reversals, right? So I'm still kind of expecting, what we're looking here right now, potentially, maybe this wave 2 being in progress here. The 50% is right there about 103.226. So I could see that and get that rejection, like a peak out rejection, and come on back down. So if we break down below 101.546, that kind of adds confidence to this count. And that wave 3, wave parentheses 3, has a minimum expected target down here around 95.104. Yeah. Let me see here. Yeah, again, yeah, definitely agree. Nothing but a bounce right now. So that's kind of what I'm looking at as far as the dollar goes, right? Now, we usually have knee-jerk reactions like this after news events, right? After either the Fed or jobs releases, right? So the question is, when the market opens up next week, do we see a rejection and the work down here to continue down? If we look over here, let me see. We look right here at the Dow. So the Dow had the pullback and the rally up here, kind of hitting this resistance. But, looking for wave 3 potentially up here around 35,031.65. So that'd be 1, 2, and then that would be 3 of 3 of 3. See some bigger moves up there. Remember, the Dow is the one that's already broken out above its mid-August swing high here. So we're still waiting to see that happen with the E-minis or with the S&P and with the Nasdaq, right? So again, had our knee-jerk reaction, rallied right back up, filled in right back up. So limited time happening here on this. Nice candle right there, right? Looks like ABC 3 down, right? Again, still looking for the breakout above the mid-August swing high here. And if we do that, then instead of, 1, 2 here, that would be A, B, C like we see on the Dow. Look for that move up. But yeah, I don't see anything reason why I think we need to head down at the moment here. As a matter of fact, look at the daily here, guys. Moved in sideways between the pivot and the R1. As we did right before we got there, kind of tested that area, but rallying up to the R1. I mean, I expect further up. I expect it up through the R2, maybe pull back, and then continue rallying up. I mean, that's what it looks like in terms of price action versus pivots right here. So, yeah, we'll see if we can get that continued follow through up higher there. I can't even say it. Let me see here. Sol, I'm still looking for 30 plus, right? So again, this is that one where I was at the end of December 30th or whatever. I was on the Wendy O show. So I'd be right here. And I said that this looked to be a good buy. We bought down there. It looked to be a good buy. I said, especially if we get above 15, then we'll probably be looking at 30. So we're above 15. Almost made it to 30 so far. Got a lot of laughter on that from people watching the show. I guess regulars watch the show. But, see, this is what I'm telling you guys. You can't worry about what some Yahoo Online says. You can't, right? So we're in this world today where everybody's like, oh, but my opinion matters. Everybody thinks all their opinions matter equally, right? But it doesn't. Your ignorance on a certain subject matter against somebody who's more of an expert in that subject matter, your ignorance does not equal their expertise. And that's going to hurt some feelings right here that I said that. I can feel a few of y'all stepping back going, what? My opinion matters. Not like you think it does. Not in areas in which you aren't trained to the extent of somebody that has, that expertise level in it, right? And everybody's going to want to come up with excuses or whatever, but at the end of the day, you're not listening. You're not listening. If you're a mechanic, right, and you've been doing your trade, you've been plying your trade for 10, 20, 30 years, and you tell me, listen, this is probably what's up with my car, I'm not going to say, oh, no, I think it's this. Because you're the mechanic. You're the expert. I brought it to you because you know, or you should know, right? To some greater extent than I do. But, again, with this internet and everybody's hurt feelings and, everybody's a little snowflake these days, right? People they take everything so personally. Like what I just said here was nothing meant to be a personal attack to anybody, but I guarantee you people have taken it personally already. And they've either left the channel, left the stream, they're out there talking smack, but it's true. It's true. And if you don't get it, that's part of the problem. That's why you're not where you want to be in life. Because you can't grasp that simple thing I just said. Instead of listening and digesting and understanding, you immediately get defensive and you cut off all thought. How are you going to get better? How are you going to get beyond where you're at in life? Not just in trading, but in life if you can't accept things like what I just said there. Life is about doing. If you're comfortable, you're sitting there, you're being lazy, you're falling behind. Period, end of sentence. Period, end of sentence, guys, okay? Let me see here. Man, I really don't know how to pronounce your name. Is that Gurgly? Ascolas? I mean, I hope I didn't just tear up your name there. He says, I know arrogancy is over the top and widespread nowadays. It is, for everything. For everything. It's not just crypto Twitter, right? It's not just trading. It's not finance, right? Everybody's an economist now, right? Everybody's a macroeconomist now, right? Armchair macroeconomist, no real training, right? But hey, I know what I'm talking about. Because somebody said a soundbite at one time that sounds like something that makes sense, and I'm just going to go with that because that's how I live my life. Come on, guys. You can do better than that, right? Hank talks about the 4 stages of competence. Exactly. Yes, Hank knows what I'm talking about. I love it. Hank says mid-80s for the DXY. I think you're right, Hank. I think you're right this time. I knew if you held on long enough, it'd get there eventually. How do I think of Bitcoin? I told you. I already told you what I think of Bitcoin. If you missed it, scroll back and listen to it, replay it. I told you what I think of it. Yeah. I think overall we still go up. I think the bottom's in until proven otherwise. And I'll let you know if I'm proven otherwise, guys. I'm not gonna let you just hang there. But yeah, until significant things happen, I think the bottom's in. Yeah. Problem is that everyone's an expert. Famous principle is that real experts never realize they are one. Yeah, exactly. That's the whole same thing I tell you guys. Again, one of the greatest things I learned. Again, I've got 2 master's degrees. Is it 2 master's degrees? Yeah, or 3, 2. I think it's 2. Anyway, and a law degree, right? And so the one thing I learned is the higher up you go in education, because I started with an associate's degree, then got a bachelor's degree, and then went up, right? And what I found out is the further you go up, if you're really paying attention, the more you begin to understand that you don't know, right? So when you don't go to school, you think the world is this way, right? When you don't go, right? And you get an associate's degree and you start getting a little bit more specialized, right? And then you figure the world's a little bit different. You get a bachelor's degree and the world's different. Then you get to a master's, and a master's, you continue, as you're going up higher in education, you're continuing to focus more and more on a specific area. And you start realizing there's a ton of area that you really don't know a whole lot about or anything about. And it continues on up as you go to professional schools, law, medicine, whatever. And then you go into your PhD. It's, PhD, guys, you're spending all these years really kind of drilling down into one little tiny area. So yeah, if you don't realize that the more you know, the less you know, then what the heck are you doing? You're not paying attention. That should become clear if you get extended education. If you don't, you can still understand that. But for a lot of people, it takes a lot of extra work because it's hard to grasp onto it when you don't do the steps, when you don't go through the stuff. So I always say, I can tell you what you guys need to do. I can tell you, that you need to pay attention, you need to change things. But until you actually do it, nothing's going to change, right? So yeah. The master's level, you get the feeling you're screwed. Yeah, pretty much, right? I mean, hey, I had a few master's degrees. I thought, man, law school won't be a problem, right? Law school's a whole different thing, let me tell you. Any of those you've been to law school, you know what I'm talking about. It's nothing like grad school. It's got its whole thing there. But anyway, so we get in through there, right? And so again, we looked at. Did we look at? Yeah, so we were here looking at S&P E-minis right here. So we've already seen that, right? And then if we look at the Dow, we looked at the Dow, right? Again, expectation is continuing higher, right? And so until something significant happens, something changes that. If we're to drop below, here for the Dow, if we're to drop below 32,948.93 cents, then I'd probably say, okay, well, I think, we're probably headed lower here, right? But that's just from this point here, right? We would have to be getting down around this 2,900, 3,000 level for me to go, okay, well, it looks like we're probably headed to a new low. Just because of structure, the way this is all panned out, right? So we would need to see a significant deviation from this structure to say, okay, well, maybe we're probably going lower. For the way it is right now, your default should be higher until you're proven otherwise for now. Yeah. But again, you have everybody fighting out there. You got people like, oh, I'm a contrarian trader. I'm a contrarian investor. What most of those people are saying is, oh, I heard that the market is usually wrong, and so I'm going to take the position opposite of what my feed feels like. That's wrong on so many levels, right? That isn't how you do it. But people are going to do that anyway. It's what they always do, right? That's how you trade, guys. Let me see here. DXY is mostly Japan. Actually, it's mostly Euro, right? It's 58% of it. We can say what you want about Japan, but at the end of the day, Japan's only 12% of the weighted value, right? So, 58% of the weighted value is the Euro USD. You know that. Yeah, 13% there, Terry Ryder. Yeah. Let me see here. But, again, everything going on with that, I think, is all is all just, it's all part of it, right? It's all just, if you think about it, right? So the yen hit that 150 handle that we were looking for the reversal, right? And it did that around the same time, just a little bit after, I believe, that the Great British Pound, the cable, had that flash crash, right? Where the pensions almost had their issue, right? It all happens at the same time, right? Everything works together, right? And so generally you expect, those big things to kind of happen around those same areas. And those things happen, up there, I believe, when the DXY was near that 114, 115 level. So, the things are all going to happen kind of in the same way. Now, each, when it comes to something like the DXY, where you have, the Euro USD, USD Yen, Cable USD, USD CAD, Loonie there, and you have all that adds up into it. You're going to have some things that kind of play out differently in the grand scheme of things in it. But overall, you remember, it's a weighted average of all those things. So, unless it's the euro really bucking it, doing something different, anything else with all the rest of it is just going to be minor temporary little movements, if anything, because there's so much less of that overall weighted average. They contribute so little to it. So, yeah. So, I don't know what daily triangle you're talking about, Andrew, for the Dow. I don't know what daily triangle you're talking. You talking about this right here? I don't think it would have if that's what you're looking at. But for me, that looks more like a 1-2, not a triangle here. It's possible if this again is, ABC down as a W and we got ABC up as an X, maybe you can find a count in there that makes this an A triangle as a B, and then you get a C a little bit pop up here. Gives you X, then you'll have Y, which will come down just below the swing low here to finish wave 4 and then wave 5 up. But I don't think that would be the default way to look at it. Yeah. I just, I think, I don't know if I'm counting it. It looks to me like it's a 1-2. So we'll see. We'll see how it plays out. But again, maybe there's some way of counting this that I didn't look at that gets you a triangle here. And in that case, it would just be an A triangle is a B, and you have a C. And so what you'll have is an ABC down, ABC up. And what does that mean? That means a couple of different things. It could mean W, X, Y lower, or if this comes up to 90% of the first one here, right? If we retrace 90%, yeah, it's going to be that markup here, right? This 36,143 in 3 waves and starts coming back down. This could be a flat. ABC down is A, ABC up is B, and then 5 more down toward the lows here is C. That'll confuse the heck out of people. Remember, that's what we talked about. Remember we were coming down here looking at this as being 3 down? I said, well, this could be a triangle. The other thing could be a triangle, right? If this is wave 4, ABC down could be A. The A triangle is a B, and you get a C up could be B. ABC down would be C, D, E. Make a triangle. So we could still have a triangle. We could have a flat. We could have wave 4 done going up. A lot of possibilities. This thing could just go sideways for the rest of the year. How would that be? People would be freaking out in the markets. They didn't know what the heck to do with it. But that's what I was talking about when we were looking at the possibility maybe we get an ABC down, because it opens up all those different paths, with this being a 3 up here, this being a 4, right? The idea being like a 1, 2, 3, 4, 5 kind of idea. If it's a year range, yeah. If it's a year range, man. And there would be so much money to be made in that, guys. And people are just going to lose all their money in that correction because they're not ready for it, right? So anyway, yeah. Definitely some possibilities in that, right? Yeah, Tesla and Apple, good take profit areas. Sure. Shorter term trades, yeah. I agree. So, I mean, that's kind of where we're at here, right? What else do we got here? We've got, see here. Okay, we looked at Sol. I talked about that. Here's the other one. Here's the other big one. FTM. Or, yeah, FTM here, right? I mean, look at this. When I talked about it, we were over here pushing up against it. And I was talking about breaking out and how it could lead to something like this here. Meanwhile, you got your bearish people out there saying, no, we're going to get rejected here. And it's going to go down to... They were already saying right here. They're like, don't get rejected. It's coming down here. They were going, look, it's a head and shoulders. You know, people try, you know, with their emotions, right? So now we're looking, you know. We're looking, can we reach it up here around 94.90? If we do, look for a pullback down toward, you know, 66.81. Then we look for a rally up to the pivot, then a pull back toward that 66.81 area, and then a rally up to the R1. Watch what happens with that, though. Look at that, 50% pullback to the pivot. So this basically becomes wave 1, wave 2, pop out higher, right? This becomes 1, 2, 3, 4, 5, right? So if we do this, is that 50% pullback there? So this is 1, and we get 2, right? Then we potentially push out even further here, right? So you can get a 3 up here to the 24,285, 4 pullback 17,609, and then 5 up there 28,412. And so this actually gets up just a little bit higher there, right? Again, they get you your 1, get you your 2 back to pivot, 3 on out. So yeah, I mean, now we see if we can do this. Right now, you know, we need, what, another 50% rally here? Is that what we're looking for? From here to here, 40%. Where we're at, about 46% rally from where we're at. So we'll see if we can get it. No guarantees, but, you know, coming out of the structure here, that's what, you know, what I'm kind of looking for potentially to happen. So we'll see if we get it. Both Tesla and Apple could be setting up for inverted head and shoulders if we pull back 10%, plus or minus 10% over the next week or two. Yeah. Let me see here. God, all that layouts is still killing me. I don't know about you guys. You guys having trouble with that? I don't know why it's throwing me off so bad. Let's see here. Where's my newest charts? Man, look at that. That rally up there. So it broke out higher. So I had this idea that we were going to get this move down here. So that we were going to get the move down here and then the move back up to this resistance and maybe get rejected, head down, right? Or potentially be done, right? If we went up higher, that would say that wave 4 is likely done. And if we got rejected here, the idea would be we play out and then head lower. So we broke out higher, clearly. So, you know, again, the count looks like ABC is done here at this demand cluster EQ area. What time frame are you looking at there, Hank? Meta was cute. What Meta was like, what the heck happened, right? Big, huge surprise to the upside. Big gap up. Gap up of what was that? 15% or something? It was huge. But yeah, I don't know. Where are you looking for inverted head and shoulders here? You looking at this right here? I hope you're not meaning left shoulder, head, and then right shoulder. Oh, this is the weekly. Let me see here. Yeah, still same thing. Where are you looking? Are you looking left shoulder right here? A little tiny left shoulder move? I wouldn't. I'm going to be honest with you. That small, I would not be looking at that at all. No. I'm not sure where else you'd be looking for it at on that. This is just nice clean movement here. Again, here we are. you should expect, if we get a rejection, you should expect to find support right around this pivot area. You've got this little gap right here that you could potentially fill in, 145 or so. But yeah, I mean, that's what we should be, looking on that rejection there if we get that there. Yeah. Yeah, I would expect this pivot area here to hold. Like I said, could potentially fill in the gap from January 25th here, but that's just right. It's right around that pivot area. Had a gap right in there as well. So I can see a pullback to there and then break out higher if we get rejected here. So yeah. But I mean, yeah, again, here's the thing, guys. Tesla, Meta, Sol, GBTC, these are the ones that everybody was extremely bearish on. If you guys remember, I was telling you guys, don't sleep on them, right? I said everybody is at this excessive bearishness. The odds are, and we were getting oversold, right? Meta and all. I said, the odds are we're going to grab us, a reversal here coming up, right? I said, don't sleep on them. And every single one of them is reversed like crazy, right? I mean, these are just, again, these are things that hopefully you begin to understand about markets as you're in them longer and you go through cycles, right? How do you know a bottom, guys? Here. The easiest way, how do you know that a bottom is likely in? It's when you have bad news and price doesn't really move all that much downward. So GBTC, it was this whole talk of, oh my God, they're going to be insolvent. The whole, contagion from FTX. Oh no, they're going to have to sell all their Bitcoin. All that, right? And that was right there at the bottom. That was right there around the bottom. Remember, and I told you, I said that it's worth a lot more raking in $400 to $600 million a year in fees managing, GBTC than it is to be broken up and sold for pieces, to have its Bitcoin sold. I was serious about that, and here we are, right? It's rallied huge, right? But remember, when you're at the bottom, you'll usually get like some bad news down there, and price just won't move as much. Again, the big tell was right there around FTX, right? We had a capitulation with FTX that was what, 10%? It was nothing. It was arguably the biggest thing that happened last year, the biggest negative thing that happened, and it barely moved. That's where you go, okay, well, I think we should start looking. That's why I kept talking to you guys about bottoms and everything, about that likely being, a terminal shakeout there, and then, a range forming and then moving back up, which is what we did, right? So yeah. Coin. Let me see here. Coin. Man, coin. Oh, coin. I hate coin. Stopped us out. Like just barely stopped us out and ran all the targets, man. Oh. God, it sucks. Oh, let me see here. Coin. Yeah, look at this. Look at this. Look at that. That's what I missed. That's what I missed it by, guys. Look at this. We had the entry over here, right? We had the entry up here, which it did, which was fine. It got rejected, came back down. Stop was right there at 31.75. It ended up getting down to 31.55. 20 cents below that and took off without us. Look at this. Oh, that hurts. Off that low. That rally. 178%. So, yeah. Good times, right? Oh, my gosh. Let me change these real quick. I'm just a little bit frustrated with that. It happened. But see, guys, this is what I mean. This happens, This is what it means to be a trader. You don't always get it. Sometimes, even you've been doing it for a long time, you get stopped out on something like that. It happens, right? So, yeah. It just is what it is, guys. So don't think that oh, you're going to become some magical great trader that all of a sudden that'll never happen to you. It still happens. It still happens. Let me see here. Okay. So here's the thing. Let me tell you guys. Coin, Mara, probably even things like NVIDIA, Hut 8, I can't think about Riot. You know, all these kind of crypto-related stocks, as long as Bitcoin, really, and crypto in general is heading up, these stocks should head up as well. Now, they're not strict crypto plays, so they do have headwinds associated with stocks, right, with the stock market. But their core business is that, or the significant part of their business is related to cryptos. Then if crypto's rising, you should continue to expect them to rise as well. But yeah, I mean, look, a nice clean break, a retest, heading back up, right? We're hitting top up here. You missed a sushi bull run by getting stopped out by 0.003 cents once. Yep. It is what it is, right? It's just part of it, guys. It's just part of it. You can't really, worry about it a whole lot, right? You'll get a lot that you'll do really well at, and you'll miss some that you'll do. You'll be like, what the heck, man? But it is what it is, right? Let's see here. Man, oh man, let me kind of zoom out a bit to the daily. Oh, excuse me. I'm sorry. Okay, so maybe got a 1, 2, 3, 4, 5, maybe. This is maybe A, B, C, D, E as a triangle here. All right. And then this would be 1, 2, 3, 4, right? 2618 area, 3.0 area for that 3 maybe. So if, let me see, it's 93.31. See, the thing is, we're getting pretty close to that 100 level. The 100 level is always a psychological level. It's a round number. It's zeros, right? So usually it works as a magnet to pull price up to it, right? It's right here at the R3 pivot. That'll actually get us about halfway in this supply structure here. Let me see. Let me kind of zoom out here a little bit more. A, B, C, D, E. Yeah. Well, then this would be, let's see here. 1, 2, 3, 4. 1, 2, 3, 4, 5. Oh, we'd be done here then. Because you go 1, 2, 3, 4. 1, 2, 3, 4, 5 maybe. That might be done. If not, it's pretty close to being done. I'm not interested. Probably, I don't think I'm interested in entering anywhere up here. I don't think the risk reward is good enough to enter up here anywhere. I think if it's not done, it's pretty close to it, I think. I mean, you still got that $100 level, but I just really don't see a reason to. Okay, if it breaks up higher, I mean, I might be looking at 93.90, the 93.30 area. But again, for me, I don't at the moment see a real reason to jump in on that right now. I'm waiting for a bigger pullback, I think, at this point. Yeah. Pullback wise, if the top is in here, you should be looking for wave 4 generally, but let's see where that gets us. So wave 4 will be the 61.8 there, around $53. Prior to that, you can look at the 50% right there at 59.55. Those would be my two targets coming down. Fill in this 1 hour gap here. I'm doing that. 4 hour gap, daily gap. Yeah. So that's my game plan. I'm going to look for a pullback toward at least. I like the 50% from where we're at right here. The 50% gives us basically the EQ of the range. I like that. But worst case scenario, we come back to 61.8, which is right around the pivot. But I don't know, rallying up through the R2, I would only expect a pullback toward maybe this area at the most. So again, still really looking at 59.5 if it starts pulling back. Let me see here. Let me see here. Yeah, so that's Michael. Yeah, that's what my pullback would be. Would be. I mean, my first target's going to be that 59.5 kind of area. Secondary target around 60 or around 53 here. Yeah. I would much rather see it find support here at the 50 though, which is the EQ of the range, because you got support here, here, you know, all across through here, right? If you were to grab just take a look at this. See right here from where it closed on this candle here? I guess where it opened, I'm sorry, right here. See, all this is just pretty much staying inside. It's kind of getting cut off right there, just wicks up basically. Same thing pretty much here, and then triangle in here. So this makes this a great stopping area, just generally, so 50 to 70.5. But I would prefer to see it stay close to that 50 on that pullback. You know, and things can get pretty crazy at that point, right? So let's say the top's in. Let's say we only get 50. Now you're looking at 150 for wave 3, 171, what about 172 for wave 5? Without any overextensions, right? So I mean that's a good move up from, you know, $53 or $59 or whatever. Right? That makes sense? So yeah, so you know, again, we could continue to push up a bit further here. Get up toward 93.30, and if we go back above that, then probably looking at around 100. You know, ultimately, you keep going past 100. You know, if you're in it and you're trying to ride it, those would be the levels I'd watch, and then I'd watch this EQ right here. And the supply structure right around 110, 111. Those would be the three areas I'd watch if we continue to break out higher. 93 or so, 93.30, 100, and then 110. 111 right there. But in all, you know, we should be rejected prior to breaking out above this swing high over here. This is the August swing high. The one I'm having, you know, on all the charts, I'm saying that's what's important to watch. Yeah. That's it's not mid-August, it's you know, first week of August, or, you know, but still it's that swing high that I think is really kind of the important one. I think you break above that on the charts, and, you know, whatever chart you're looking at, it means you're, you know, there's a good chance you're probably heading up to a new high. So yeah, so, you know, how would this associate with what we're looking at Bitcoin? Well, you know, again, Bitcoin I think is going to go a bit higher. So again, we could get these higher moves on coin following with it. You know, these moves up higher would make sense running along with Bitcoin rallying up higher. Yeah. So, but for me, there's no clear entry right now. You know, no easy entry at the moment. So I would be really cautious about trying to jump in on it. Yeah. So we'll see. Yeah, I think, you know, again, I think Bitcoin's got a little bit further to go up there. Like I said, I think we're at 3 of 4 of 3, right? So we'd still like have 5 of 3 to go, and then pull back for 4, and then 5 again higher, right? Before we get the real pullback, we get 5 waves up and then a real pullback, right? That's kind of the way I'm still looking at it right now. So generally, crypto-related stocks should be somewhat similar in their movement. Doesn't mean they could be done and just kind of do some sideways on the pullback, you know, while Bitcoin finishes moving its thing up. But yeah, generally they should be about the same on the right. So there we go, guys. Let me get out of here. As always, remember, the only thing you control is how much you lose. So please do me a favor. Really, really keep working on that risk management. That is the most important part of trading. Most important thing you'll do as a trader day in and day out. Okay? I don't know how many times I can say that, but I've said it every day for quite a while now. hoping that it gets through to you guys. Mentor program, people. We've got about 70 minutes or so, and then we'll meet for our weekly session. Looking forward to seeing you guys then. For everybody else, hopefully you guys will take advantage of the Tier 3 special, howtotradeToWin.com/T3. And you can jump on that while it's still up there. It's just about done, though. We're just about to get rid of that. And then, really, if you're serious, if you really want to learn to trade, join us on our mentor program. Send me a message, DM me or whatever. First person that does it gets the one remaining discount I have. And then the rest of them will be the price that we have it at. But I'm telling you right now, at any of those prices, what you're going to get there is going to change your trading life. It can't not. As long as you put in the work, as long as you do the things, take the steps, and do the, actually get out there and do it, what you have to do. I can't just tell you and you expect things to magically change. You have to actually listen to what I'm telling you and then apply what I'm talking about. But if you do, it's going to change your trading life. And if you're doing it, it should actually change your whole life. Again, I keep telling you guys, the way you are in life, everything else in life is going to be the exact same way you are as a trader. You can't divorce the two. You're the same person. So if you're lazy, if you're a victim, all those things in life, it's going to make making profits and keeping profits very, very difficult as a trader. If you seek to make yourself uncomfortable, to get out of your comfort zone, to learn, to push yourself, most likely your trading is going to show a significant increase, a better result, because you're not just accepting that everything's against you and that you have no ability to change it, and you're doing things you need to do to change it. So even if you're not with us, keep that in mind, guys, okay? All right, hey, listen, we'll be back next Tuesday, 11 a.m. Central Standard Time. Hope to see you guys joining in. Take care. Have a great week. Trade safe, guys. Great weekend, I guess. We'll see you then.